I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, May 10th. We've got, 4 markets for you today. Corn, soybeans, live cattle, and going to wrap things up with lean hogs as well. Before we get into the markets, do want to introduce you to our new website, bluelinefutures.com. It's always been the URL, but we've kind of revamped it, adding a lot of great new tools here, including research, education, and platforms. I encourage you to check it out. The education area is fantastic. You go click on that down to the university, kind of test your knowledge, whether you're novice, intermediate, or advanced. You can continue to scroll lower. You can take a bunch of different courses. Introduction to Futures is a good one if Futures is new to you. Kind of see the layout here. Walk you through some different things to get a little bit more familiar with the futures market and how it works. And this is just, again, another tool, the toolbox to help you improve your knowledge and hopefully trading in the futures and options market. So again, bluelinefutures.com, a lot of great stuff there. Go ahead and check it out. Now, without further ado, we'll get into the markets. We've got July corn pulled up here to kick things off, and we've had a little bit of a slide lower here over the last week and a half, and we have had some planting delays, but a lot of that is old news. We've known on the 6 to 10 day forecast and a little bit more extended forecast over the last several weeks that we were going to get these delays. Now, the surprising thing, I think, yesterday in the crop progress report was that we're even more delayed than a lot of analysts were expecting, especially in those I states, looking at Iowa, Indiana, Illinois, really behind pace. But it looks like we're going to catch a little bit of a break in some of those areas where producers are going to be able to get some good planting done. And so with that expectation, you're starting to see some long liquidation come into the market. We had support near 780. We broke down below yesterday, but we're able to hold trendline support here in today's session, which was encouraging for the bulls. That comes in from those January lows, and we've tested and held this several times on the way up. If trendline support gives way near that 770 area, we wouldn't be surprised to see that trigger some additional long liquidation, take us down towards that 50-day moving average, as well as this next support pocket. That comes in a little bit closer towards that 750 area, plus or minus a few cents. Now, also the thing to note is that we do have a USDA report later in the week. We will have estimates emailed out to clients. And when that report is released, we'll send out all the information via email and text to clients as well as soon as we get it. So again, corn on the verge of a little bit more of a breakdown if trendline support comes, but that may not happen until we get that USDA report, and potentially that USDA report is a catalyst to help this trend line hold. So that's what we're looking at for the corn market. Moving over to soybeans, a little bit different story. It's been a lot weaker of a market as we've been consistently marking lower highs and lower lows over the last several weeks and kind of making a beeline towards this next support pocket, 1550, which represents a 100-day moving average, as well as previously important price points. This was resistance back in February. That became support in February, support again here in April, and potentially support here in the near future. If this gives way, 1548, 1550 area, there's really not a whole lot of technical support until you get down to this breakout point going back to January, and that comes in a little bit closer towards that 1450 area. So again, a lot of support here, but a break and close below, and there's really not a whole lot until $1 below. And as mentioned with corn, potentially the USDA report is the catalyst to either help us hold this support level or break down below. Time will tell, but those are the levels we're looking at for July soybeans. Now, moving over to the livestock side of things, we're going to touch on live cattle as well as lean hogs. Live cattle have been probably the most disappointing market here as of late. They just haven't been able to muster up any momentum behind them despite the cash market trading at higher levels. It looked like yesterday we were going to get a pretty strong reversal, and that would maybe potentially help the market find its footing today. But that wasn't the case. Again, despite having the cash market trading at 140 in the south today. There's a lot of support down here, 131, 132 area, as you can see, all the way back to last October. This is a must-hold area for the bull camp. A break and close below, probably go retest those lows back from September in that 128 region. We continue to be optimistic, but our patience is wearing thin, and this support's got to hold. If we can start to find our footing down here, The objective would be in this gap, not necessarily a full gap fill from April 25th, but I think a partial gap fill would be realistic, expecting the cash market to stay relatively firm and the outside markets to maybe settle down a little bit, which has been a headwind for the live cattle market here recently. And wrapping things up with the tech talk here is the June lean hogs rather. As with live cattle, they haven't been able to get much going. A lot uglier of a chart than live cattle. We're right here back at previous resistance in January, the breakout point in January, right near that psychologically significant 100 level. This is, again, a must-hold area. Psychologically significant. A break and close below here could potentially take us back into the low 90s. But I think this holds. We're getting a little bit oversold, and probably to the most oversold levels we've seen since last fall. Last time we were at these levels, we were able to mark some near-term lows. So hopefully history will repeat itself here again in the very near future, but we're going to find out one way or another if that plays out. If we do get some good fundamental backdrop, which I still think the market has, and some buyers to step into the market, I think we can retrace this breakdown point up near the 110 area. But again, we're skating on thin ice at that psychologically significant $100 level. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.